Searching for a new infinity? Well, good news, the search is over. Check out this month's offers on new models.
Ni hao ma. Testing, testing, testing. 1, 2, 3. Testing. 1, 2, 3. Wow, 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 wow. Wow, wow. Hey, a little bit repetitive. All right. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of nearly 19,000 foreign exchange traders stationed around the world. Now, I think that's amazing because when I first started trading Forex, well, first of all, there was no YouTube. Amazon.com was a little online bookstore startup, and I didn't really know any other Forex traders. There really wasn't any. So the fact that we can gather here as a community every day, you know, I don't take it for granted. I think that's really a great, awesome opportunity for us to collaborate. So thank you for being here. Thank you for being a subscriber. Thank you for your positive energy. Let's get on with it. Go. So let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. Thank you for being here. Ask questions, get involved, and I will participate. In fact, participation with you. I will do my best to share my nearly 20 years of experience trading with you. Fundamental analysis, fair game. Technical analysis, fair game. Trader psychology, whoa. Yep, so we got all that covered. Ask questions, get involved, take notes, and please leave comments under the recording. So if you're watching this as a recording, awesome. Thank you for being here. Thank you for being a subscriber. Man, so many things to be thankful for. Also like to thank Traders Way for being part of our community as well. They've been hand selected as a broker that has earned my loyalty and respect. If you want to hear the story about it, watch yesterday's video. Fast execution, speed, narrow spreads, big swaps, world-class customer service, those are all things associated with tradersway.com. So if you go to tradersway.com, open up a demo and practice on their MT4 or MT5, the really cool thing is when you're ready to trade real money, perhaps they've already earned your loyalty and respect as well. And then easy peasy lemon squeezy. All right. Also, yes, IMF is going on right now. Here's the updated projections. I'm sure you're paying attention to this stuff, right? Also, I want to let you know I bought my tickets and I will be booking my hotel room at the Harvard Club for New York City. So I will be there in, 10 days? So if you guys want to do a meetup, have a cocktail on the roof of the Harvard Club in Midtown Manhattan, have some hors d'oeuvres, and then maybe head out into the city, do some drinking and cigar smoking like good girls do, like us good girls. We how many was there? I think there was about 7 of us last time we met up, which is a year and a half ago, and we had such a great time. Honestly, just like old friends. It was really cool. So hopefully, if you guys are around, you want to meet up in the city, I think that, let me get a date. I think that'll be like, let's see, I'm going to fly in Wednesday, probably work there. Friday night, maybe? Is that too much? Friday night might be crazy, right? But anyway, somewhere in there, Wednesday night, Thursday night, Friday night, something like that. The 14th, 15th, 16th, and 17th of August. Then I got to get back and get the New York, get the new trades on, right? The new year trades on. So if you guys want to just meet up. Okay. No, the week after, 14th, 15th, 16th. Somewhere in there. I'm not sure because I haven't solidified my business meetings, but I definitely want to get together with boot campers. Cool. All right, so anyways, this is going on imf.org. I'm sure you're paying attention, right? World Economic Update. Yeah, July 2021. Oh my God, that's now. I know, right? Cool. So, yeah, do your own work. All right, cool. So here we are. Oh, you're in, Johnny? It's going to be good, Johnny. So I'll make some phone calls, make sure we get the rooftop. Okay. So taking a look at here, dollar on the right week, that's good. Yen up and down, Related to the typhoon, maybe? Could be a rabbit, could be. Swissy strong, CAD weak. Whoa, what? Whoa, all over the place. Kiwi down, Aussie down, Euro down, Pound, wait, there's nothing to buy. This says, oh my God, is this the last week of July? That's what that looks like to me. There's really nothing to do because you don't really want to. I mean, you could trade, you could do a cross here, Swissy dollar, right? Do dollar Swissy Swissy CAD. It's all crossing right now. It's all crosses. And, again, I give you permission to do all of that this time of year, but I'm really a trend trader. So that's what I'm really looking for. You guys can do your crosses on your own. Perfectly fine. Nothing to be ashamed of. Okay. So what I'm looking at here is if you're going to continue with current market conditions, okay, you can see that there is a sell. Let me get my drawing tool. Okay. All right, pretty standard operating procedure. The only thing is it didn't work really your last try, but that's what's going on currently. Okay. Smaller time frame people might be arguing this is trying to set up, and that's fine, but maybe not quite yet. Okay. And I judge that on things like seasonality. So really, I would look at this and I would continue bearishness. So you remember by middle of June, it's time to walk away from a bullish market. And so by the time you hear in July, it's definitely bearish. And I would expect this to continue for a few more weeks. Now, of course, it doesn't have to. Maybe hitting the psychological level of 80 is enough. Okay, this is 80. Okay, so maybe that's enough. Maybe that is the bottom. But one of the things we talked about a week ago, I was still in northern Wisconsin, I believe. And we were talking about, this being required before it's truly gone from bearish to bullish again, right? What do you think? Got it? So technically, I would tell you, oops, that was supposed to be. Technically, I would point this out here and say, that's our current trend. And until it breaks, you would trade with the trend. Oh my God, look, I already drew that. Look at that. I already drew this. No, right here. Oh, look, I already did that for you. I did it again. It must be me. So I just heard if I flew to London, I can't fly back to the United States. And they're announcing that those changes, no changes are going to be in effect anytime soon. So I can't go to Europe. Okay. I'd like to go to Hong Kong or Singapore. I don't know if those are I don't know if I'm allowed to travel there or not. I might travel to the Caribbean though. I think I can do that. All right. So Aussie. Anti-vaxxers, yeah. Well, and for me, I'm not an American citizen. So there's a problem. I think you can travel to the UK and come back if you're American, but I ain't no American. I'm Canadian, yo. So this is definitely the wrong one. I got to get the equidistant. I got to change my toolbar. Customize. Where's my equi? Definitely don't want that. That's stupid. Okay, so I got to remove. And linear regression channel, standard deviation channel. Well, let's do linear for a bit. Nothing's right, I'm torn. You're a little late. Yep. So one of the things you would say here is this is bearish. I don't know if this is helpful or not. I think what I'll do is I'll just turn my own tools on. Turn my cell phone. Mark, if you have a green card, you're not allowed to come back directly. So you'll have to quarantine for 2 weeks in Mexico. And I think my wife would kill me if I went to London for a couple of days and then had to spend 2 weeks in Mexico. So that ain't going to happen, yo. But I'm not sure if it matters where I've gone. Anyways, this is where we are now. We are making these decisions. Are you still a bear? Is the market bearish for you? What do you think? And this is a little different than some of the other ones, right? So like, let's do this now that I've added them. Let's remove my indicators. We can get that, remove that. I guess you know what? Remove them all. Let's just clear this out. Let's start fresh. Let's get naked, baby. All right. Weekly. So I guess we have to pay attention to a few different lines. Let's do this differently. Let us start there. What an amazing coincidence. And then I think I'm going to like connect all these. Or another thing you could maybe play is even just the top of last week. Okay. And at some point, what you're looking for is the end of this type of phenomenon. Okay. That's not projection. That's price action if it continued into the future. Okay. Cool. So when would you technically say that this momentum has been broken and there's a new momentum to the upside? So that's what we're using our technical analysis for. Okay. Now fundamentally in here, we called this as a bullish market. Fundamentally. Bullish fundies. So the question is, have these bullish fundies changed? Well, that's a question that you need to decide. And if the answer is change is delta, okay? If there's no change, no delta, then at some point these technicals should resume in the previous direction, okay? Here's what happened last summer. Okay, so this is June. See, there's the June Fed meeting. And somewhere in here is September. Okay, now remember there's a delayed move because this is the fourth year of an 8-year political cycle. So we knew this would be delayed. Normally, I would assume something more like this, right? We move a little faster. And that's my alpha, by the way. That's my alpha. I'm adding seasonality to political cycles. Okay? So anyways, look what happened last summer, right? By July, there's some upward movement. and everyone thinks they got it right, and then it comes all the way back down. Okay? Then what? When the market is ready to put cash in the market, then we get this. So what I'm trying to discern is, are we going to set up here? What I think we're doing right now, so let me delete all this. Okay. I think we are in about here. Okay. So when will we know to be bullish? Well, I think if we're below this price, super bad news, right? Do you guys agree? Super bad. If we're below 85, we're going to be in a world of hurt. Because there's nothing really holding us up. Okay? For a very long time. Hundreds and hundreds and hundreds of pips of vulnerability. So we don't want to even think about that. So what are some of the possibilities? Some of the possibilities of price action could be okay. Which pair? Does it even matter? JK? Doesn't even matter. It's CAD yen. Okay. You can see it right here. You can see it here. You can see it here. But it doesn't matter. This could be any pair. Okay. These are weekly candles. Each candle is a week. Okay. Weekly. Shows it there. Okay. Date is on the bottom. So the question is, do you think it's going to do this if you're still fundamentally bullish? I don't think so. Okay. But what if it did this? Still unlikely in my opinion. Okay. But it could happen and I would have to react to this. Could it do this? Okay. I think it's more likely to do that. But does this mean I should be selling right now? I don't know about that. Okay? I don't know about that. A to B isn't to necessarily B to A. But if you were a bear, this 88 area is definitely shortable. Okay? I don't think you'd be measuring this, but I guess it doesn't even really matter. Okay? 88 to 88.50 is a pretty decent sell zone if you're a bear and you want to take it back down. So that looks like, right, this. Okay. And then if we're now talking mid-August, as a bull, because I am a bull, right, I'm going to be very, very interested in looking on smaller time frames like dailies and stuff. I'm going to be trying to catch something like this. Reb's going to 85. Yeah. And that's as much as I'm willing to give you. Right? Yeah, that's my line in the sand. I gotcha. It could be, look, it could be a little lower, but this whole could be, should be stuff. I'm not going to be happy if we're that low. So here's what I'm trying to say. I'm still a bull, but I don't think the market's going to turn bullish yet. Okay. So could you be selling this? Yeah. Well, let's say it differently. If you're going to sell it, it's pretty reasonably interesting up here. So how do you trade this on a smaller time frame now? Oh, well, let's explore that. Okay. At what point do you trade it as a breakout? Okay. I think many people have already traded it as a breakout. Let me do it on this time frame for you. Okay. So what you're supposed to do, what I teach you in my price action course, okay, is identify support and resistance any way you want. And when you recognize a breakout, you sell the retracement. Okay? In my book, I believe I describe it like this. And by the way, when did I write that? 2008? Okay? So, like 100 years ago. We describe it as it's going to move sideways forever and ever and ever and ever until it breaks. And when it breaks, you wait for the pullback. Okay? And so if you identified that, you're going to be a bear most likely. So if you've identified that, then that's probably the trade you got going on now. And what will be interesting, because if you're like, oh man, well, that's really helpful, Wayne, you should have told me 3 hours ago. Now, you should have been doing your job 3 hours ago. Anyways, the interesting thing is this in 4 hours and 8 hours and 12 hours and 24 hours, some point in the future, this might become the new sell. Okay? Okay? The difference between me and most, well, it's hard for me to say because I don't know very many gurus, but like I'll give you an example. I was analyzing some EAs that some website was pitching. They had like a sales pitch on a web page, and it makes a million bajillion pips and super accurate, and everybody's making money and everybody's happy. And I'm like, I look at what it's doing, and what it says is, by the time you break, you should sell. Like if we're breaking, it would now sell. And of course, what the EA then does is say, this is a 15-minute candle, right? So maybe let's do this on an hourly, for example. Probably needs one more candle on that one. But what it does is it says, see, I told you to short here. Right? And the interesting thing is, no, it doesn't. After it breaks, right, it actually puts you short way down here. Because, right? So what it does is, so we're already bouncing off support, but what it does is it waits for the candle to close here below support, and then it says, this is the sell signal here on this candle. No, because of course, by the time that candle closes, you'd be short here. Then, of course, what does it show you? Down, 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 up, 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 up. Now, I might tell you to sell too, or the way I teach you, I tell you to sell, but I say sell here. And right? And it's interesting. I know how I came to this philosophy because this is the nonsense that's sold out there, both by gurus and by EAs. After it's broken support, they tell you to sell. And maybe for a little bit you make some money here. But I know from my, let's say, first 5 years of trading, I hated these pullbacks. I hated the pullbacks. I hate being in a trade and watching it pull back. So you're up like plus 35 or 25 or whatever it is. And I found I almost always would get knocked out at break even. And then it would go plus 100 without me. Okay? And I thought and pondered and pondered and thought and pondered for, I don't know, a year. And I tested a lot of things over that period. And I realized this is a key moment in time, but I want to sell here. Because I said, well, if I'm always up plus 35 or 25 or whatever the answer is, because you're like, well, why didn't you just take profit? Okay, whatever. Okay, I found, well, if I can just wait for the pullback, I don't have to suffer the pain, and I'll go for the 100 pip move instead of the 35 pip move, watch 35 pips go back to break even, and then here, and I'm like, well, there's something going on here that I need to learn. And then the second half of this is how can I get into this 35 trade so it's more of a 135 pip trade. And what it is I realized, right, I need to be selling here, not here. Right? So this is good, this is bad, and this is good. And this took me a year, maybe 2 years of analyzing my own trading and going through the trader psychology of trading, 15 hours a day. And I realized the little bit of knowledge I got from education was wrong. You don't sell the breakout, you sell the retracement. Okay? And of course, an indicator can't do that because it's late all the time. And so I changed my plus 35. So my typical trades were like plus 35. And if I could get past 15, I almost always made, well, actually, if I got more than 10 pips, I almost always got somewhere between 35 and 50. And that's how I came up with MAP. Okay? If you remember from the book, the minimal acceptable performance. But then my next question is, how can I turn the 35 into 135? And it was the entry. Okay. So like, again, we're still staring at this candle, and that EA would wait for this to close below support. And then it would say, look, that candle's a sell. It's not a sell. You didn't sell up there. You sold down here. Right. And therefore it's very, 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 very misleading. Very misleading. And I would say, well, let's just call it misleading. But I understand that that's what people are taught. So it seems logical. But then I'm pretty sure if you buy the EA, you're going to lose money. Okay. Now, maybe if you back test it, it'll work. So what's the problem with backtesting? Well, emotions and stuff like that, right? And I can tell you, I hate going, like I said, selling down here, making a little bit of money, and then having it come all the way back. Now I'm negative 12, negative 15, negative 20, and I should actually just be selling, right? So the way I got to it actually was pretty interesting. I just kind of thought about it. I would paper trade what I wanted to do. Maybe I did it the other way around. Maybe I did the other way around first, and then I did it then I swapped. But here's what I did. I sold the way I would normally sell. So I sold a break because that's what the literature kind of told me. I didn't read much of this stuff because much of it wasn't really out there. People didn't really trade on charts when I was around. So that's kind of what it said, wait for a break and sell. So I'd sell that. But then I said, it doesn't work good for me, okay? Because it'll work a little bit and then it'll come back and then it'll go. And I hated these going from, like, let's say more realistically, plus 10 to negative 20 before turning profitable. So then on my demo account, right, this would be live, right? This would be the live. And then on the demo, I would wait for it to come back. And that's kind of using Fibonacci or something. Okay. And then I would take the one here on demo and I would sell that one. So I would sell here and then I would sell here. And I wanted to see how often does it actually come back. And almost always like, oh my God, I was right. And I found out this worked better for me for two reasons. One, I made more money, but two, less stress. Okay. So I just gave you 10 years of trading experience right then and there. Right then and there. Okay. Just understanding that will take you to a whole nother level. There's a lot of psychology in that. It took me a long time. Okay. So if you think this is a sell now, great, prepare. Later today or tomorrow, you'll probably get a chance somewhere between, well, most likely it'll come down, let's say to here, up to here, and then down. And that might be tomorrow's trade, and that's exactly what I teach you. If you walk into New York City and you look around, you're like, what's up, fellas? Okay? You're the sucker. If you walk into a poker game wondering who the sucker is, you're the sucker. Okay? You're going to get slammed. Same thing. So you should be walking in and saying, oh, this is doing exactly what I planned yesterday. See, yesterday you may, I'm not saying you should have, I'm just throwing this down. Yesterday you may have said, this is a selling price for me. And you may have, there's likely many different reasons for you to have thought this. One of them is being that weekly candle that we talked about, okay? But there's probably many others. And so therefore, New York for you today was decided yesterday. Okay? And now you're planning tomorrow and you're like, oh, this is good. So you're going to make money on, okay? You're going to make money on this trade. Money, cash money, cheddar. Okay? Got your paper. Okay? And that's great. Now what? This is tomorrow's trade or later today's trade. Okay? So you're thinking, okay, this is good. You're already making money. You're making money on these first two trades. And if it comes back, then. If, then. It's called a plan, a strategy. Thank you, Hope. Okay. What do you think? Okay, you got to mark your lines. Okay, you got to mark your lines. Do you think this will be a challenge? Do you think that might act as support? Okay. So as a bull, what should you be looking for? As a bear, what should you be considering? Okay, you got to think ahead, y'all. Well, the problem, Nuno, is all you got on this time of year is risk, money out, money flow out, and news. So I don't know. For me, it's a more dangerous time to be scalping. That's, but you can do it. Obviously, we're shooting at rabbits, but all you're trying to do is get your 1% for the month, and you'll be fine. Okay, but typically, what I like to do is scalp a portfolio, right? Which means, you imagine if you made 5 trades a day or 10 trades a day, and every trade you have a stop, and within an hour or two you've moved the stop to break even, but you never take profit. See, investing is interesting because there's so many paradoxes. And the best way to get filthy stinking rich is to never take profit. The best way to get filthy stinking rich is stay poor. Never pay yourself. Okay? Well, so Nuno says, yes, I have profits, but could have much better if I let the trades run longer. Well, then they're not scalps. Okay? So mentally and emotionally, Nuno, it helps to make a declaration of your trade when you make it. So maybe you write it down, literally write it down, that this is a swing trade. Now, you might be on a 1-minute chart, that's fine, but make a commitment to the target. Okay? And sometimes I think having a written contract with yourself, okay, is an important process to the commitment. So I don't care if you're on a 1-minute chart, but like, for example, so I told you guys long ago, okay, that we're looking at like S1 and R1 type targets, right? And so maybe your target right now, if you sell this, okay, is to take it down to 150. And okay, so now you have this type of analysis, but you might be on a 1-minute chart or a 5-minute chart or a 15-minute chart. That's fine. But write it down that your job here is simply to manage the risk on a small time frame. Okay? Because that's why you're scalping. You're trying to say, look, you're going to take the shot, and if you don't get the follow through that you expect from the market, then you get out with a small loss. Great. But then you jam your stop when it's appropriate, and then you got to leave the target. Okay? So I wouldn't call that shooting at rabbits. Okay? But it seems very similar. I don't know. I guess it's like you're using the rabbits as bait or something, and you're trying to get, you're trying to get a bigger meat eating game of some sort. I don't know. Right? You're keeping the little fish to bait for the bigger fish. I don't know. Okay? So, right. So I would start. So we know this is an entry, right, on Monday. And here's the follow-up trade. And these are all, you could be doing these on smaller time frames. And that's why it might feel more like a scalp. Okay. So sell. Okay. And this is sort of your role reversal. Okay. So, for example, on the first day of Christmas, on the first day here, let's focus on this. Where's support? Okay. So where's the next sell? This could be the sell, or this could be the sell. Okay. Next one is in here. Never really got it. Okay. Okay, so now you're looking. Okay. And now you have this. Okay. So the question is, like, if you sold here, what's the target here or the lower low? Depends if, right? If you're a scalper, you'd be watching it very closely. By the way, that's not quite level, is it? But a swing trader would let it drop to 150. Okay. A scalper is watching the short-term price action pretty carefully. Okay. Okay. So again, price action would dictate you're a bear here and you're going to continue being a bear until it's no longer bearish. And in that case, let me show you what looks no longer bearish. We do something like this. Okay. That would change everything. So unless that happens, you stay a bear. Okay. Scalping in, but swinging out. So Nuno, you might have heard me say many times over the years that I scalp into my spots and I spot into my swings and I swing into my position. Okay. That means if I have a setup on a 15-minute chart, okay, I almost always enter on a 5, but much of this resistance might be seen on an hour or 4-hour basis. So this could be like a 4-hour 21, 4-hour 55, for example. That's a 4-hour 55, and I might have that as part of my plan. Watch this. Okay. Anyways. Oh, I was on a 5 minute. I thought it was on an hour. Anyways. Okay. So it's very helpful to have some of these plans pre-made. And that we call that trade planning. Okay. So if you're a bear, okay, as long as we're below this area, you're a seller. Okay, that's one, right? I like to start on the higher time frames. Okay, this is just an hourly chart, but you have to remember this sets up as a bear first. So you know it's bearish, and it's going to stay bearish until it's no longer bearish. Okay. Did anybody find that helpful? Okay. If it makes a new lower low, then you grab this low and you drag it across, and that's your new sell in a day or two ahead. Okay. I highly recommend, I mean, look, it's the summertime. I normally do summer school for you guys, and I apologize. I didn't do summer school. I mean, I'm doing macroeconomics for you, but typically I have you guys really, really focus on your education more than your trading, because a small profit in this time of year is wonderful. Okay. So I think you should be focusing more on sharpening your saw than cutting down trees. So I would recommend in a situation like this, like you need to log into FX Bootcamp and go back through the training course, the price action training course, for example. Because this is what shooting at rabbits mean. That there's no real, you may not fundamentally believe in pound yen down, okay? But you're analyzing the market, and you might have said this was support, okay? And then this was resistance, which becomes support. And now this is resistance, which becomes support. And then what? That becomes resistance. So at what point do you recognize that some of this has failed? Okay. When as a bull, when did you notice that it's no longer bullish? Okay. Well, that's price action. Okay. 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 And you can see I have it heavily marked for you already. What a good coach. Thank you, coach. Okay. Okay. How would you feel about this? Is that a good buying opportunity right in there? Oh, it's just one fee for everything. It's just FX Bootcamp. Okay. Now, one mistake that amateurs make is they don't understand the consequences of what's happening. Okay. I prepared you months in advance that the middle of June is going to be a turning point in the market. So many people just don't understand any of this. Like, what's going on here? What's going on here? Well, you should just be scalping or taking profit and you're on vacation. This is what I've taught you. Go on vacation or spend time sharpening your saw, but you don't have to trade. Inverted nonsense. Sam's like, inverted head and shoulders. Yeah, that's true, but it's all nonsense. Who cares? Doesn't matter. Staring at patterns and stuff. You're right, of course, and I'm not knocking you down. I'm just saying understanding why and being able to anticipate that it's going to happen before it happens is way more important than saying, hey, that reversal that already happened is an inverse head and shoulders, right? So it's more like, dude, I prepared you for this moment in time up here. Okay. Now, the second one would be to just trade this like an inverse head and shoulders. And you're like, oh, that's a pattern, right? And so Sam might do something like, okay, let's mark the neckline, and you do this, and you say that's that many points. So then you project out the neckline, and then you take the distance from here to here, and you extend it from there to there. And you're like, I made a 282 pip trade. Yay! That is not the right way to do this. Okay? That's amateur. Small potatoes. So what do you put? One mini lot on that? One standard lot? Depends on how much money you have, right? It's just one useless, pathetic little trade. Now, I know some gurus send you an email and they're like, we made over 280 pips this quarter. It's like, this quarter. That's an okay trade. But my point, and let me get to it, is understanding where in the cycle this is, just like the importance of this. And to say, you're going to have 27 trades on this move that has 282 pips potential, but also extend that out fundamentally and seasonality wise to say, well, actually, between now and the end of the year, this is more like 882 pips, and I'm going to have 47 trades on it. Versus one good trade on the books. Who cares? Who cares? One good trade. Who cares? Nobody cares. Okay? Because you're going to have 27 mediocre trades and 8 bad trades, and your one good trade doesn't offset all of that. And you know what it leads to? Mediocrity at the end of the year. You understand, right? Like, I want you to understand how the market works. I've always told you this. And so one good trade, whatever, you're going to have one bad trade and it all takes care of itself. It ends up with giant mediocrity and you don't know when to load the boat. It's all about knowing what you've got. You pick up a shining rock out of the ground. And somebody says, oh, that's really pretty. I'll give you $10 for it. And they're like, really? This thing I just picked up off the ground? Sure, you can have it for $10. Now you just gave somebody $1 million diamond for $10. And you're like, huh, look at that. You got to know what you got. Okay? 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 And then take advantage of it. The trick about investing is scale, not leverage. Okay? So, for example, if I had you open 2 standard lots. On a pound yen trade, and this is pound yen, and this is the most volatile. For, I would say, 99% of people in this chat, you would be crazy over leveraged. What percentage of available margin would you have? 20, 5, 15, 40, 62. What would your available margin be? Did you put 80% of your account? Right? But for most people, it's a lot because you're still learning. It'd be foolish to have a lot of money and not know what you're doing. Okay? You'd be so over leveraged that if it doesn't work out, it's probably unrecoverable. Meaning, if you lose 50% of your trading account, then when you're over leveraged, that's easy, by the way, then you need 100% just to get back to zero. And if you're that stupid, this is not going to be easy. And this will take you a year and this will take you a day. And most people don't have the patience and discipline to pay the penalty over a course of a year to make up for one mistake for a day. So they're just going to do the same mistake again and end up with 100% of zero. Okay, cool. Instead, what if you did one mini lot? How much available margin would you have? 90? 95? Okay. And you take that trade, move it to break even, take another. Right? You still have 95%. But the first one might actually be profitable. So now you have 2 trades and you have 98%. Okay. And then you do another one, move that to break even, do another one. And after 20 trades, you have 2 standard lots. Okay. And you have 100% available margin. Okay. Did you do it through leverage? No, you did it through scale. Brilliant. I know, pretty good for a supermodel, right? Okay. You have to know that kind of stuff first. The second thing you're going to need to know is fundamentals, macroeconomics, seasonality, trader psychology, and such. ... But this stuff that I'm sharing with you is the easy stuff. Okay? Okay? This isn't even the interesting stuff. Oh my God, trading is so wonderfully interesting. This is the boring stuff. So you got to be able to trade first and foremost so that you can do something like that. I mean, really? So check this out. Here's my homework for today. Module 5, Unit 3. Nice, right? I haven't even read this, so actually, because I have to keep this on my mind. I'm so busy and I have to squeeze this in. It's 2014. You work for a company that reviews new funds for banks and hedge funds. Your manager has asked you to write a report on the viability of investing into RDJ Investments, a new hedge fund founded by 3 Estonian mathematicians, all brilliant academics with no trading experience. You were sent information on the fund and are now tasked with advising on its viability. RDJ Investments is a hedge fund registered in the Cayman Islands with offices in the UK. The fund focuses on achieving high absolute returns that have low correlation with market indices. At the same time, it puts in a strong effort to reduce risk using sophisticated quantitative methods. The founders have seed funding of £1 million so far and are seeking 30 to 50 million in total. The fund is comprised of one main algo model. Therefore, evaluating the model, you are also evaluating the fund. Here's the fund's performance and historical data. Also consider all this data. Right? Isn't this fun? Cool, right? See, that's the interesting stuff. That, by the way, that's one half. I have to evaluate a second fund, and I have to do both of this today. I have a bunch of other projects I have going on in my life, and I might have to do that macroeconomics thing too, and I haven't had time to review the PowerPoint that the PhD made for me. Holy smokes! How do I don't have enough time. No, it wouldn't be a group. It'd be a fund, if that's what you mean, Dre. What's the name of the course? It's the official name is the Oxford Algorithmic Trading Program. Well, the thing is, I have to get it done at by 6 p.m. So, anyways, I got to get on that. Yeah, I'm done with MIT crypto. I got a 97% grade. And that includes all the written papers and group participation activities and quizzes and stuff like that. Cool. What's up, Gisa? Yeah, okay, Dre, email me. If you got skills or money, let me know your thoughts. If you got like, I know people that want to do this, we have easy access to $1 million or something like that. You know, you know people, or you have money, or you have a need, or, you know, okay. But right now, I'm in the process of setting up a fund offshore. Oh, what was that? It just pinged me. I don't know who just pinged me. Sounded like Skype. Oh, by the way. Anyways, no, we'll leave it at that. Yeah. Hit me up, Dre. There's a lot of interesting things going on right now, which is good because there's a lot of money in the world. There's a ton of money in the world right now. It's flooded with money and there's nowhere to really put it. Right? Stock market's at all-time high. Bond market's at an all-time high. Well, I don't know about all-time, but nearly. And you're like, wait, the bond market's rallying and the stock market's rallying, like, and gold is back at 2,000. You're like, what? Why is everything rallying? Well, there's still a ton of cash available, tons. So there's a lot of opportunities, and it's sort of like you got to be picky and choosy. And so there's like, you know, and everyone's interested in crypto, and there's the landscape's changing now that China's kicking everybody out. That's really good. There's some really good opportunities out there. Yeah. All right. So if you guys got access to opportunities, let's talk about it. Let's set it up. Let's knock some of these down. What do you think of this? You have to decide, is that your breakout or not a breakout? No, guys, look, professional investors have tons of money. Now, maybe the average dude on the street's broke. That's different. Okay? But if you think about how, like, even a wealth manager works, maybe his average client has only got $250,000. Okay? They're probably young if they only have that kind of money. Or they just started savings, or, of course, have gone through divorces. But for whatever reason, that's not a lot of money. Okay? I'm talking about retirement and all that kind of stuff, right? So they have a house with a mortgage, with some equity. They have $250K, and it's not a ton. But as a wealth manager, you might have $100 million under management, of which you have $5 million in cash. Where do you put the money? Okay. And all of a sudden they want to spread that. So when you think of it as there's hedge funds that have raised money And so it's an aggregate, right? They've raised money from 50 different clients, and now they need to allocate. Now they're acting as an allocator. The first step was to go out and get money, either manage people's money or raise from other people's money. And then you got to allocate. And now you got to like find places to put the money. There's a lot of money. Now, I'm not talking about one person sitting around with $100 million of personal wealth throwing money around, but there are lots of people that manage or raise money for investment. And there's, when you look at, so when I tell you, for example, that there's a 25% increase of cash in deposit at JP Morgan, you have to extrapolate that and say, well, most people wouldn't be so stupid and hold all that cash in a bank account. But that's what's happening. So the average people that got free money, okay, from the government, they just didn't know what to do with it. So they just didn't do anything. They may not have even noticed that it showed up because it just was wired and they don't check their bank account that very often, right? So anyway, so it's just sitting there. Most people, however, hate cash. Cash is trash. So you take the money out and you do something with it. You buy the stock market, you buy some meme stock, you spend it, you pay down your debt, you save it in your kid's college savings fund, whatever. You got to get rid of your cash as soon as possible. And very often that just gets moved to an investment account. And there's very often an investment manager. Okay. So when you see all this cash laying around, you have to look at the aggregate. Most people will deploy the cash, and therefore people that are in the business of allocating or deploying capital have tons of capital. Think of it. The US government gave Americans trillions of dollars for free. Well, much of that gets put into the hands of allocators, whether it's bankers, investors, wealth managers, whatever, okay? And so now, if you're trying to use Forex as a profession, you need to slowly work your way toward being worthy of some of that allocation. Okay? And say, yes, I can manage your money. If you allocate some money to me, I can provide you steady returns with low volatility. Okay? I can give you a Sharpe ratio of what? 1.5. And they're like, oh, that's good. It's not great. It's not amazing. It's not out of this world. Like, no, out of this world, okay, would be based on either luck or over leverage. Now, you might not see it, right? And you say, well, if it was over leverage, you're right. Well, but you would, on the short run, see it as a 3.0, for example, amazing Sharpe ratio. But the thing is with leverage, when things are good, they're really, really good. But when things are bad, they're horrid. They're really, really, really bad. Your losses are leveraged as well as your wins. So you can say, well, look, the thing is, if you look at me over 1 year, over 3 years, over 5 years, my Sharpe ratio is about 5 almost all the time. It's never 2 and it's never 0.5. It's just, steadily just pissing along. And what this means is for every unit of risk, you get a half a unit extra of reward. It's not because you took more risk like through leverage. It's just that when things are good in the market, when the market's good, you take advantage of that. And then when the market's bad, not only can you scale back, but then you can actually go short without any problems. And you're just kind of always doing sort of the right thing. Okay. You're almost always sort of doing the right thing with reasonable amount of risk and steady returns. And you're like, well, when the market's up, you're a buyer. When the market's down, you're a seller. And when the market's neutral, you're just treading water. And you get a sense of these market changes based on your fundamental analysis of macroeconomic data and central banking policy. And they're like, oh, really? That really? You're like, yeah. Oh, well, here's some money. Okay. So here's what I've been telling you for 5 years now, or for 10 years now, depending on how long I've known you. You need to be moving toward that narrative where someday, let's say 5 years from now, you say, look at my history. Reasonable return, okay? Consistent reasonable return with low portfolio volatility. Okay? And then someone will allocate to you. Maybe it'll be 25 grand. Trade that beautifully. And then get 10 people with 25 grand. Trade that beautifully. And then get some dude that can put in 100K and just build it up. You're like, but Wayne, it's going to take me forever to get filthy, stinking rich. Yes, because you're not dreaming anymore, but you are creating value, right? And your value is a business. It's a service. You provide a service. Some people clean toilets. Some people mop floors. Some people cook French fries. You trade people's money. Okay? And if you want a yellow Lamborghini, it's simple. Provide $5 million worth of value, and someone might be willing to give you $1 million in cash as a thank you. Slap you on the back. Hey, good job. That was nice. Here's $1 million. Okay? Blow $400K on your car. Pay $400K in taxes. And put the other $400K in your personal account. Or rent the damn thing for $3 grand a month and put $800,000 into your trading account and double it. Because why would you buy a $400,000 Lambo? Stupid. Stupid. Anyways. Okay. All right. I think I'm done. I'm spent. So we did a couple of dollar pairs. I guess I got to do some commodities, right? Would you please click the like button if I've given you some lovey-dovey today? If you're feeling good, would you please click the thumbs up? All right. Gold. Farting around, getting closer and closer and closer to support. Neat. How can you qualify for the live bootcamp program? Well, if you've watched all the videos in fxbootcamp.com, then you pay a fee and you take a little mini course and there's an exam. Okay? I don't remember what the fee is. I think it's $200. And you do the mini course, and then at the end there's an exam, so you have to install some EAs into your MetaTrader. And we tell you to go to a certain month of a certain year, and we say in 30 days. Okay, so now you're trading the simulator on a particular pair of a particular month, and we say over the course of 1 month, make 10,000 pips with 0 losses. And if you can't do that, you're not allowed in. Okay? And by the way, for all of you guys that are in the live trading group, I am like ridiculously seriously doing stuff towards our mission. It's the reason I'm going to New York. So if you're like, man, I don't know if anything's going on, I feel like I'm drifting, or I don't know how you feel. Anyways, it's happening, bro. So I want to make sure you're happening. Okay. So anyway, so for the person that wanted in, that's what you have to do. So you pay $200, you take the mini course where we go over the rules of engagement, and then you install some EAs and indicators and stuff in so that we can track. See, the thing is, as you're trading, it's talking to our servers and we watch you. And if it takes you longer than a month to make 10,000 pips, you fail, you're not allowed to join. If you make 10,000 pips, but you had 2 losing trades, you're fired. We're not interested. Piss off. Or try again. Or if you only make 8,322 pips over the course of the month, we're like, hey, good job. Yeah, goodbye. We're not interested. Or try it again. Okay. Okay. Yeah. And by the way, I mean month in simulation, not that it takes you a month to do the exam. Okay. I don't know who's here today, but has anyone successfully completed that exam? Is anybody who's in the live trading group right now? The portfolio manager group. No, there's no call center. If you want to learn how to be a professional portfolio manager, that would be the right thing for you. If you don't, then it wouldn't be the right thing. Okay. If not, just do FX Bootcamp, join the swing trading group. It's an awesome group. Super awesome group. Cool. Henry's still in level 2, but that's good, Henry. Keep at it. Oh, Greg says you have to do it in 2 hours. $10,000 pips in 2 hours. 3, 2, 1, go! You're like, what? It's like being the Olympics, right? You're like, wait, did we start? What? Or Hunger Games. It's probably more like Hunger Games, right? Like, I gotta get my bow and arrow first. Don't do it. It's a trap. Yeah, most people just do the swing trading group, man. FXBootcamp.com, guys. FXBootcamp.com. Okay. It's going to charge you a one-time fee to take the 30 or 40 hours worth of video courses. And then after you join, it says, hey, do you want to also join the swing trading group? It's $99 a month. And you're like, yeah, sure. Boom. Or no, not interested. Fine. Okay. What's the benefit? You get to hang out with me, Gregors. That's it. We meet weekly to set up trades and to do a whole bunch of other things like group work. Okay. Deep dive discussions. Okay. Oh, is that right, eh? So yeah, right? So the swing trading group and the live trading group are two different things. It's being renamed to, the professional portfolio manager group. Okay. But the swing trading group, we meet Thursdays and we set up trades that are worth 100 to 300 pips each. In the summer, I've been focusing, let's say the last couple of months, because we're nearing the end of a trend and entering in a period of consolidation. I focus more on reasoning and psychology, but back in the back in the earlier part of the year, so let's say over in here, when making trades, so we were dollar short, not necessarily gold long, but like dollar short trades, we had already set all this up technically. So to keep talking technically every month, like, did you buy the dip? Did you buy the dip? Did you buy the, that's not necessarily, right? It's not, you should already know that. And all of this area was discussed in advance. So then once you have it, you have it. In this period of time, Greg, we did things like talk about how do you maintain your conviction? How do you maintain confidence and conviction in your strategy? How do you keep going long? How do you know to keep going long? How do you stay confident, right? And convict with conviction for your strategy, right? So, right. And in that case, in there, we also did a lot of group work where people worked in teams to come up with trading strategies. And sometimes, like one week I say, okay, you can only be long this one thing. Or other times I ask you to create biases. And then from that, I split people off into the groups and they do group work and people come back and present. And then I interrogate and challenge and ask inquisitive questions about people's strategies. What happens if this happens? What will you do if this other thing happens? How do you know you're wrong? When do you know you're right? When do you add a second trade? All these things. So back in March, in my swing trading group, I had people plan all the way to June. Actually, July, I think, but certainly June. In March, I had people plan out trades, price action, future things, weeks and months in advance before things happen. I had them plan, if they're right here, how will it likely behave until that June 16th deadline, which again, we had prepared as the end of the move. Okay. So that's that. That's the swing trading group. The live group is about portfolio management and preparing people to, work in banks and hedge funds and stuff like that, which is different. Okay. So think about, right? Think about like you have an associate. You have an analyst. You have a portfolio manager. And you have a hedge fund manager. Okay, so how do these people interact with each other? Okay. To make wise investment decisions on behalf of their clients. This could be you. And then after a period of time, you get a promotion. And now this is you. And your responsibilities change. And who do these guys work for? These guys work for this person. So you can then be promoted here. And who's this person reporting to? And who does this person report to? You're like, oh, well, that's the hedge fund manager. He's boss of everything. Nobody's boss of everything. Okay? Clients. Oops. Clients. Okay? And regulators. And auditors. And what else? Lawyers. And your compliance team. Okay? Okay? How would you guys like to fit into a program like this, where you enter as an associate, then you become an analyst, then you become a portfolio manager, and meanwhile you're learning how to be this hedge fund manager so you can do the whole damn thing over again on your own so that you can start hiring associates, analysts, and you're probably the hedge fund manager, portfolio manager in the beginning, but you also know how to do all this. And on top of all of that, you need to know how to do sales. Okay? Okay. So anyways, that's what I'm building. Oh, that was good coffee. Interesting, huh? Now, how many people here would want to be a portfolio manager working for me, trading other people's money, as well as your own money, and have associates and analysts reporting to you directly? Yeah, Greg's like, I did that 30 years ago. Yeah. Well, Greg, now you're in this position where, like, you know what you're doing. You're in control of your own money. Oh, yeah. No, now you don't have regulators. You don't have compliance. You don't have bitchy clients and lawyers and auditors, and you don't have to raise money. And you're like, you just sit at home. Boom. Okay? Okay. Okay. What if I said the minimum amount of capital you would need to bring would be a monthly fee plus $250,000 in your own cash? You're like, whoa, I don't have $250,000. All right, well, we need to get you there. You have Forex. What's the problem? Time and money. Those are the only problems. But see, that's the thing. Like Michael's like, never. Why? Why? Do the math, right? Let's say you have $5,000. I don't know how much money you got. Okay. Let's say you have $5,000 and you can grow it at 5% per month. Average. Do the math. Right? Well, that's the issue, right? So if you can't post consistent gains, boom, then stay on the education track. Get there. Look, I'll tell you, you will not have a better opportunity you will never have a better opportunity. There's nothing, even as a venture capitalist, of all the startups and all the business plans. Honestly, I've read 1,000 business plans. Okay. I've read probably 1,000 patents. Okay. And by the way, I've had another friend go through another IPO. His company's being listed on NASDAQ, I think it is. So I have lots of high-tech friends, and so they're all in the business. They're all venture capitalists now and stuff. But anyways, so I've seen the world, man. I've seen the world. There is nothing better than Forex, especially if you're talking about having an honest, real job where you sit down and you make decisions and you have instant gratification. You don't have to wait 15 years working 80 hours a day to go IPO and suddenly now you have money. You have a small business and you can grow it and scale it as much as you want. And you have easy access to capital in the form of leverage from your broker. So you can do it. There's two variables. How much money you started with. Okay? And it matters, by the way. Okay? And time. How long you do this? 5% per month. Okay? So, bust out a spreadsheet. I don't know how to do spreadsheets. Then get educated. I mean, shoot, I've been in university for 7 years straight. You don't have time to figure out how to use an Excel spreadsheet? Take a class. They're free, for crying out loud. Get it done. No more whining. Okay? So bust out a spreadsheet and say, well, if I started with 5K, okay, earning 5% growth per month, and you never pay yourself. Hey, I thought you wanted to get rich. The best way to get rich is stay poor. Never pay yourself. Okay? And ask yourself, how long will it take? Do the math. Yeah. And then you say, well, what if Wayne was a nice person as well as beautiful and turned it into 25,000? How long would it take? Easy. Figure it out. And you're going to go, oh my God. Oh my God. Oh my God. Oh my God. Oh my God is what you're going to say. And it's the best small business opportunity you'll ever see anywhere, ever. Hey, you can invest into commercial real estate. And you can make as much as 8% a year. Uh-huh. Who's your favorite real estate guru? Do you guys have a favorite YouTube real estate guru? Who is your favorite? Grant Cardone? All right. So you put money into his fund. So was it Cardone Capital? It looks like that or something, right? All right, cool. So he raises the fund, charges you 1%. Then he finds the property, charges you 1%. Gets the financing, charges you 1%. Okay? Then hires a management firm that takes 10% NOI, but charges you 1% to find them. And then in 2 years, does a refi, charges you 1% for finding the refi. And then after all of that, you're going to take all those expenses, wipe it all down, and you'll get your money. And you'll get your 8% after all the fees and expenses of your 10K that you put in. And so you'll make $800 a year, plus you'll get a big bonus of like $6,000 on the refi. Meanwhile, he's got the 100M, earning 1% of the 100M, earning 1% of the 100M, 1% of the other M. Have someone else do the whole management. He may or may not get this, so I'll just take that out. But that's going to be a cost that you have to pay, not him. And then to get your $6,000 big win Because remember, this is $800 a year on your 10,000. And after 2 years, you get a big payoff, 6,000 of which, so you haven't even got your 10,000 back. He charges you 1% of that again. Cool. So he makes 1 million, 2 million, 3 million, and then double dips and makes another million again, 4, plus he probably gets a piece of this as well. So you get, let's say in 5 years, you get your 10K back, plus you made 10K. Okay. And he's made 6 million bucks. Or you can just trade Forex. And instead of 8% a year paid in, and this is normal real estate, where you get a small fee or payment, small payment, small payment. Typically you refi after 5, but he's got to pay you off. It's almost like a Ponzi. It's legal. He's not doing anything wrong. I would do the exact same thing. But anyways, okay. So in year 1, you get a small payment. Year 2, you get a small payment. Year 3, you get a small payment. Year 4, you get a small payment. Year 5, you get a small payment. But then you refi. So he gets a big payment. Okay. Then he has cash flow. Then he refis it, gets another big payment. But then you get your big dollar here. And it all works out to be 8%. Where, of course, he's got hardly any money in it, and he's making millions and millions and millions, just fees up the yin yang. Okay. Now, you could do that, or you could do Forex and make 2 to 5% per month. Focus on the long run, and you're always liquid, and you're in control of your own business. You're in control of your destiny. You make all your decisions, and you have easy, free access to capital, and that's called leverage. Okay. Dre has a question. Then I'm going to leave it here because I've gone on pretty long today. But Wayne, should I start an LLC? Or should I stick to retail trading larger than 5K? Well, first of all, your lawyer should be charging you $5,000 for something like that. And if you're buying an online LLC, you're making a mistake. Okay. So you need an LLC when you either make a lot of money or lose a lot of money. And by a lot, whatever, but you only got 5K. So you can barely afford the legal fees. Now, I know you can do it for probably $300 or $400. Here's the problem. Having an LLC, especially a single person one, is almost pointless, especially if it eats up most of your capital. The second part of it, Dre, is that it's not that you have an LLC, it's that you have bylaws written for your Forex trading business that clearly outlines what a Forex trading speculator does. Because if you just get an off-the-shelf, LLC with just normal language in it that it could be any kind of business, it'll be so vague that, when you get audited, either you make a lot of money or lose a lot of money. You'll get audited and they're like, dude, but your company isn't even a Forex trading business. And you're like, well, it's some sort of LLC I bought cheap on the internet. I filled out some online forms and boom, I'm an LLC. But it's pointless. Okay? Okay? It wouldn't be really, you'd spend the money and you'd pay your taxes, and then 8 years later, when something interesting happens legally to you, people will show up and say, well, your company's full of crap anyways. Like, what is this garbage LLC nonsense that you have? It's not compliant. It doesn't even discuss what you do. You haven't passed any bylaws and you haven't had any board meetings. And you're like, dude, what is this? And you're like, I don't know, I bought it. And you'll find out the whole thing's worthless. Okay? So, no. But I'll tell you what, the first time an LLC is really important is when you lose a lot of money. it will give you a great advantage over just losing a lot of your money personally. And then when you make a lot of money, you're taxed very, very well in the United States. It's a pretty cool setup. It's not perfect, but it's quite advantageous. So yeah, but if you only had 5K, dude, I don't know. I wouldn't worry about it so much. Okay. But make sure you get a good law firm that says, I know how to set up your LLC for you with bylaws written specifically for a foreign exchange company in the business of speculating in the interbanking market. Okay. That can be done. And I can send you a referral. Okay. I would be more focused in, turn your 5K into 50K. Okay. And then go get yourself a lawyer that will charge you $5,000. Don't buy something that's $350. What you'll find is it'll get you into legal trouble down the road. You need my email? Wayne@fxbootcamp.com. All right, cool. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being here. Thank you for the thumbs up. Thank you for leaving comments on the recording and all that kind of stuff. I'll see you tomorrow.